Hi, and welcome to the IPR podcast, where we discuss all things payments and remittances. I'm your host, Aamer Abedi, CMO at RemitONE, and I'm joined by my colleague, Ababacar Seck, Managing Director for Africa, RemitONE. Today, we're exploring why remittances are so critical to African economies and how technology can help central banks enforce official FX rates, track cross-border flows, and strengthen financial inclusion. In many countries, remittance inflows are larger than foreign direct investment. For example, Nigeria receives over $20 billion a year, but the central bank only has visibility on a fraction of it. This gap in monitoring costs millions in reserves and creates compliance risks. We'll look today at practical solutions, from real-time settlement tracking to data analytics and automation, and discuss whether artificial intelligence is as relevant as it's often claimed. If you find these conversations useful, please subscribe to the channel so you never miss an episode. Let's dive in. Our first section is about why remittances matter. Ababacar, let's start with why remittances are so important. In many African countries, remittances make up a significant share of GDP. Can you share some examples of how these flows impact national reserves and currency stability?
Absolutely, Amir. Remittances are a major source of hard currencies for many African economies. For example, Nigeria official figures show about 22 billion US dollar coming officially each year in the country. But the central bank can only see a fraction of all the remittances coming to Nigeria. The remaining flows are not visible in real time, and this makes it hard to manage reserves and stabilize the currency of the country. In Gambia, for example, remittances represent close to 22% of the GDP, around 20% of the GDP in Comoros, 17% in Liberia, and in many other countries. The remittances are very, very important. With these flows, if they are properly monitored and repatriated, they would strengthen the foreign current exchange reserves of the country and help maintain economic stability and the national currency value.
Still so difficult, though, for central banks to get accurate data on these inflows.
One reason is that many regulators still use manual tools and fragmented reporting coming from different banks. They often don't have a standard protocol that all providers must follow. This means that they only see partial information, usually after long delays, and this limits their ability to react quickly.
Okay. I also think that, what I've observed at some central banks, is that they use very disparate systems, legacy systems, and they need not necessarily be talking to each other, right? So, these systems, they operate in silos. And so it becomes difficult to get a consolidated view where all these different systems or tools that they're using are able to give them data in a consolidated fashion.
This is exactly the case. The reports they get are from, different banks or institutions in different formats, and to align them and analyze them is not easy. So they need a proper way to get the data and do the analysis they want and control everything.
In our next section, we'll be covering the topic enforcing FX rates and tracking settlements. One major challenge is enforcing the official FX rate across all providers. This is a challenge faced by almost all central banks. How can they enforce the official FX rate across all providers and then verify settlements? Can you, Ababacar, explain what happens in practice when there's no standard reporting protocol?
Many central banks, set an official FX rates that all IMTOs should use to avoid black market pricing. But because they lack the necessary tools, they just issue one rate for the whole day. Okay? MTOs receive this rate, but there is no reliable way for the central bank to confirm it was applied. Afterwards, regulators also struggle to check that the funds were repatriated properly and so on.
Right. I take it when you say MTOs, you're referring to money transfer operators, but this could apply to banks and other financial institutions as well, right?
Yes, yes.
How can technology help central banks provide rates in real time and verify what these financial institutions actually applied?
With the right platform, the central bank can distribute rates dynamically, even during the day. So MTOs can pick the rates at any moment to apply to their transaction. So this means what? This means that the official rate can adjust in real time, which is closer to how the market works. At the same time, every transaction is recorded by the platform, so the regulator can see exactly what rate was used and compare it against what they wanted to be applied.
Okay, interesting. Settlement transparency is another big gap. Why do many central banks and regulators struggle to track the USD and euro currencies that are remitted into their banking systems?
For this, there are two main reasons. First, most systems are designed to track domestic payment, not cross-border flows. Second, data is often fragmented across banks, IMTOs, and aggregators. This makes it very hard to match what was declared with what was actually settled.
Thank you, Ababacar. How does real-time monitoring help close this gap?
When the central bank has a real-time platform like RemitONE, the central bank can see inflows as they happen. For example, they can see that Bank A in the country received a certain amount in US dollar or euro coming from an IMTO B, for example. Later, they can reconcile this against the bank's declarations to confirm that all funds were repatriated correctly.
Can you share a practical example of how this looks in operation?
Yeah, we can take an example. Let's say in Ghana, for instance, you can track remittances payouts across channels, okay? Roughly 5% of the transaction go to bank accounts, 50% are paid out in cash, and the rest is paid to mobile wallets, okay? The trends are changing. Over time, you can measure how this mix shifts, like seeing more adoption of wallets and so. This visibility can help the central bank understand the trends and enforce compliance more effectively.
Excellent. This brings us seamlessly into the next section of our discussion today. Our segment 3 is around big data, automation, and AI. Now, there's a lot of talk about AI transforming compliance and cross-border payments. But in reality, most central banks still rely on basic tools, legacy applications, etc. What do you think regulators really need right now? Big data and automation or advanced AI?
Well, my belief is today the priority is definitely big data and automation. These tools are practical and can be adopted right away. They allow staff to see patterns, track compliance, and make informed decisions faster. AI is very interesting, but it is still early for most regulators to trust it fully for decision making.
Right. So I guess what you're saying is it's a step-by-step process, it's an evolutionary process, but big data and automation has to happen first before AI starts making its way into the corridors of the central bank, so to speak.
Yes, it is a wiser approach for me.
Right. And it's understandable, I suppose, right? Because if you're a central bank, you obviously have to tread very cautiously and carefully before bringing in agentic AI, into their operations, and allow
Sure,
agentic AI to make decisions on behalf of the regulators.
sure,
How can
Amir.
data analytics, though, help staff make better decisions without replacing their judgment?
Well, analytics can highlight anomalies and generate options. For example, the system might show unusual transaction volumes and inconsistent FX rates,
Hmm.
but the final call still belongs to the compliance officer. So you
Right.
get better visibility without removing human oversight.
Do you see AI playing a bigger role in the next few years, or is it still too early? I appreciate you used the phrase too early, but I mean, how early is too early?
AI will definitely become more relevant over time. This is
Mhm.
sure. Okay? But right now, it can as well support by providing recommendations and automating parts of the monitoring. But I think, personally, most central banks will prefer to keep humans in control of their decision, at least for the foreseeable future.
Right. Okay. So essentially, what you're saying is that for cursory tasks at the central bank level, like here's pointing central bank staffers to uh, certain instructions or policies, etc. Agentic AI can rather AI can play some role. Simple support services, but AI can actually have a role, and that will happen gradually. However, when it comes to making decisions, making judgments, uh, obviously basing the conclusions on various factors, AI is not going to replace humans at the central bank level anytime soon. That's understandable.
Yeah, most central banks are still in the process of understanding better AI and its capacities. Okay? So, they will follow the wise approach.
Mhm.
You based on human analysis and adapt the functionalities of AI over time.
Mm. Okay, great. Let's talk about financial inclusion and mobile money, which is the fourth topic of our discussion today. Beyond compliance, there's the question of financial inclusion. How do these platforms help move people from unbanked to underbanked and eventually banked? So just defining the terminology here, by unbanked, we mean people who do not have a bank account, who do not have a mobile wallet. The underbanked are individuals who have a mobile wallet but lack a bank account.
Well, they help by supporting mobile money integration. For example, more remittances are now paid out to wallets instead of cash in many African countries. And the trend is growing. In the long term, this creates a record of transactions and can help people access credit or other services, financial services. Even if full banking access isn't practical in rural areas, right now mobile wallets are a big step forward.
Can you share some examples of how mobile money integration has improved access?
Yeah, we have many examples. In Kenya, for example, M-Pesa has been a huge success story. Okay? People can pay bills, transfer money, and even get micro loans, all from their phones. In West Africa, for example, as well, we have Orange Bank that is also starting to offer small-scale credit through wallets. This shows how digital tools can drive financial inclusion, even when traditional banking isn't an option.
Okay. Sorry, I'm going off on a slight tangent here. Why is it that the success of M-Pesa in Kenya has not been replicated fully in other neighboring countries?
Well, every country has its own specificities, okay? But this success is, right now, almost close in many other countries. Mobile money has been adopted largely in West Africa, for example. Same in East Africa, and the trend is just growing and growing, okay? I believe that in the foreseeable future, everyone will go mobile.
Right. Okay, great. Thank you. So, Ababacar, in summary, what we're saying is that for the central banks, we are at the cusp of real technological innovation now. The pain points highlighted, that you highlighted, that central banks face, those pain points are being addressed by technology solutions like RemitONE and others. The technology is there to give them a consolidated view on monitoring all the transaction inflows and outflows. The technology exists to track their FX rates and make sure that all the parties in their jurisdiction are abiding by those FX rates. In terms of reporting, there's sophisticated automated reporting tools available now with technologies like RemitONE and others. And then, of course, eliminating the need of manual reporting or relying on the financial institutions to send reports at their own convenience. So you're automating this whole process. And of course, the application of data analytics and then moving into the AI territory. So we are actually witnessing a very interesting transition at the central bank level. So I just wanted to try and bring all those points that we discussed together, as we wrap up. Today, we've seen that remittances and cross-border payments are more than personal transfers. They're critical to economic stability of a nation. Technology can give central banks better tools to track, monitor, and manage these flows in real time. If you're listening as a central banker and wondering whether your systems are ready, please ask yourself, do you know where every dollar is going and how it affects your reserves? Talk to your teams and start testing your processes now. Preparation always keeps you one step ahead. Thanks for listening to the IPR podcast. If you found this episode useful, please subscribe to the channel, leave a review, and share it with your colleagues.